Welcome to the Bullvine Podcast, your go-to source for inside stories, cutting-edge research, and the latest updates in the world of dairy farming. In the 50th episode, we look at global dairy market insights, rising trends and challenges for November 2024. So please grab a glass of milk, sit back, and let's start with today's episode.
This week's report offers timely insights critical for dairy professionals strategizing for the future. As farmers and industry executives brace for the implications of harvest projections, milk price forecasts, and evolving consumer preferences, strategic planning becomes more crucial. Understand how pricing impacts margins, explore strategic planning amidst market dynamics, and gain insights into upcoming dairy trends and regulations to stay ahead in this dynamic market.
The European Energy Exchange, EEX, trading activities have shown a noteworthy movement, with butter futures presenting a significant uptick. Over the past week, EEX butter futures traded firmer, marking the third consecutive week of increased prices, averaging at €7,300 for the NOV24 June 25 strips, a 4.9% rise. This uptick in butter prices reflects a bullish sentiment in the market, potentially driven by expectations of increasing demand or reduced supply. With the total open interest climbing by 220 lots to 3,166, this indicates a strong interest from market participants, possibly anticipating further price increases. In contrast, the skim milk powder scenario was slightly less optimistic, with futures rising by 2.9% over the same period, settling at an average price of €2,688. The reduction in total open interest by 79 lots to 6,706 suggests a cautious approach from traders, who might perceive the price level as a temporary peak or wait for more precise market signals. This modest increase in S&P prices might hint at stable demand conditions. Still, the reduction in open interest could indicate hesitance about the sustainability of the current price levels. Whey futures presented a notable downturn, dropping by 3.5% to an average of €885. The unchanged open interest in whey futures suggests that traders hold their positions, perhaps expecting market corrections. The decline in whey prices could indicate shifting demand dynamics or an oversupply situation, which may pressure the market in the short term. The mixed trends in the EEX futures for dairy products suggest a market in flux, reacting to various supply and demand factors. While butter experiences a robust price rise, indicative of demand strength or constrained supply, S&P's cautious gains and whey's price dip point to more nuanced dynamics affecting the dairy sector. These trends underscore the importance of closely monitoring evolving market conditions, as they offer insights that could significantly impact pricing strategies and inventory decisions for dairy market stakeholders.
Last week's SGX futures trading activity paints an intricate picture of the global dairy market landscape. Whole milk powder WMP was slightly firmer, showing a promising uptick of 3.6%, with prices reaching an average of $3,094. This rise indicates a steady demand for WMP, likely influenced by growing consumption needs in crucial importing countries and potential supply constraints in major exporting regions. Skim milk powder SMP followed a similar trajectory, albeit with a modest increase of 1.9%, settling at an average price of $2,981. The strengthening price suggests a robust market with healthy demand and tight supply conditions. Such trends often mirror macroeconomic factors like currency fluctuations, trade policies, and seasonal production changes in leading SMP producing nations. Anhydrous milk fat AMF saw a 2.7% increase, reaching an average price of $7,078. The surge in AMF prices could be attributed to its diverse applications in food industries, such as in the production of confectionery, bakery, and dairy products, an increasing preference over traditional fats due to its longer shelf life and stability. This reflects a broader shift toward premium dairy derivatives. This trend underscores the global food market's growing appetite for high-value dairy ingredients. Butter futures increased by 2.1% to an average price of $6,633. Although a modest rise, it highlights the ongoing anticipation of holiday season demand and the dynamics of stockpiling versus actual consumer consumption. This increase in butter prices might relate to the overall tightness in dairy fats amid rising production costs and supply chain challenges. These SGX futures trends collectively illuminate the interplay between supply constraints, demand fluctuations, and global economic conditions. They reflect broader market dynamics, characterized by a struggle to balance between burgeoning consumer demand and the ability of producers to meet this demand efficiently. This struggle can lead to potential challenges such as supply shortages and increased production costs, but it also presents opportunities for producers to innovate and meet the changing consumer demands.
The European cheese indices display a downward trajectory, signaling potential challenges for cheese producers and exporters. However, this also presents opportunities for strategic planning and market positioning. Cheddar curd, mild cheddar, young Gouda, and mozzarella all experienced price declines over the past week. Cheddar curd dropped by €56, marking a 1.1% decrease. Yet it remains significantly above last year's levels, highlighting a mixed sentiment in the market. Mild cheddar followed a similar pattern, with a €47 decrease, 0.9% drop, boasting a 35.3% increase year over year. Young Gouda and mozzarella fell by €60 and €54 respectively, with Gouda down by 1.3% and mozzarella by the same percentage. Still, both maintain a price above year-ago comparisons, indicating resilient underlying demand. For cheese producers, these trends imply a period of adjustment, as declining prices may pressure profit margins. Exporters might view these indices as a mixed blessing. At the same time, current price drops suggest competitive challenges. However, higher year-over-year prices could still offer favorable trading conditions, particularly in markets with robust demand. Ultimately, staying vigilant about production costs and exploring diversified markets could help cheese producers navigate this complex landscape. Additionally, leveraging existing price advantages in year-over-year figures may aid exporters in maintaining competitive edges amid fluctuating dynamics.
Recent global dairy trade (GDT) auction results reflect a cautiously optimistic outlook for the global dairy landscape. Whole milk powder (WMP) emerged with a subtle yet significant price adjustment, logging an increase of $75 plus 2.1% from the previous pulse auction, landing at an average winning price of $3,610. This uptick from the prior GDT mark also suggests an upward trajectory of $110 plus 3.1%, aligning well with market expectations and indicating a steady demand. Skim milk powder (SMP) followed a similarly positive trend, with its average winning price rising by $55, 2% from the last pulse auction, climbing to $2,860. Compared to the GDT C2 price weeks earlier, this reflects an affirmative vector by $110 plus 4%. Such movements in SMP indicate an adjusted market sentiment, likely driven by shifts in export demand, targeting specific markets influenced by varying geopolitical and economic conditions across the globe. From a broader perspective, these price evolutions in the GDT auction serve as critical indicators of the global dairy trade's health. The steady increase in WMP and SMP can be viewed as a response to shifting consumer preferences, supply constraints, or possibly accelerated purchasing due to forecasted shortages in certain regions. These upward trends could incentivize increased production, mainly pivoting toward markets with latent demand potential amidst fluctuating supply dynamics. However, stakeholders within the dairy industry must monitor these market movements closely, as they could herald a stabilization period or foreshadow more dynamic shifts ahead. While reflective of current market conditions, such auction results provide strategic insights that could influence future trade strategies, pricing mechanisms, and supply chain calibrations across the global dairy sector.
Fonterra's recent data on milk collections paints a picture of robust growth. In New Zealand, milk collections for September reached 174.2 million kilograms, marking a substantial increase of 4.9% year over year. Northern Ireland contributed 14.6 million kilograms, up 4.8% yearly. In comparison, Southern Ireland SI added 69.6 million kilograms, posting a 5.0% increase year over year. Season-to-date collections in New Zealand totaled 307.2 million kilograms, a solid 6.1% rise compared to the previous year. Across the Tasman Sea in Australia, Fonterra's collections also reflected positive growth. Reports indicate 10.2 million kilograms collected, a 4.7% increase yearly. Season-to-date Aussie collections exceeded their last season by 2.6%. The upward trajectory in Fonterra's milk collections in both regions suggests a potential boost to the global milk supply. As Fonterra is a significant player in the international dairy market, this increased output could help stabilize global milk prices, especially if other regions struggle to keep up with demand. However, the market could see varying impacts depending on how these increased supplies align with global demand trends and potential production slowdowns in other vital regions due to climate impacts or herd health challenges. A more robust supply from New Zealand and Australia might exert downward pressure on prices, but only if global demand does not escalate proportionately.
Italian and Chinese dairy sectors continue to showcase nuanced performance amidst evolving global market dynamics. Italy's milk production in September stood at 975 kg, signaling a slight decline of 0.6% year-over-year, following a similar downtrend in August. Despite this dip, cumulative collections for the year's first 9 months climbed by 1.2%, indicating resilience and adaptability within the Italian dairy landscape. Additionally, improvements in milk fat and protein levels point towards a focus on quality enhancement, thereby potentially fetching premium market pricing. Conversely, China's October farm gate milk price averaged 3.13 yuan kilogram, stabilizing over 3 weeks but marking a significant 15.9% decline year-over-year. This trend underscores mounting pressures within the Chinese dairy sector, potentially due to economic challenges and fluctuating domestic demand. However, this price correction could render Chinese dairy competitive globally, opening avenues for export. These developments mirror broader global dairy challenges and opportunities. Italy's focus on quality amid fluctuating output and China's competitive pricing highlights the push-pull dynamics affecting international markets. The global dairy market now faces the dual pressures of maintaining quality and competitive pricing, which are essential for sustaining profitability amid varying regional milk production patterns.
The U.S. dairy market dances to the changing cheese and butter dynamics. Last week's cold storage report unveiled a significant reduction in cheese stocks from March to September, hinting at a robust demand driven by noteworthy exports. However, the milk production report signals a stabilization in U.S. milk output, causing the market to brace for an uptick in cheese production, especially with new plants coming online. Should demand cool off, stockpiles could swell, nudging prices downward and unsettling market participants. Cheddar blocks have already felt the squeeze, sliding to $1.8375 per pound, the lowest since May, while barrels slipped slightly to $1.8675. Butter, too, retreated slightly as storage levels burgeon, preparing for the holiday season. Despite the flurry, when prices dip, buyers quickly stockpile, evidenced by the record-setting trades recently. Cream, cascading from elevated butterfat levels, saturates the market, pushing cream multiples below seasonal norms, a siren song for opportunistic buyers like butter churns. Consequently, butter production is at a historic high, up 5.3% year-over-year for January through August, with the potential to rise further as lower cream multiples incentivize production. For U.S. dairy producers, these dynamics present a mixed bag. While current cheese and butter demand pushes market activity, a potential shift or decline could bring lower prices as supply exceeds demand. The bird flu's impact on California's dairy herds also looms, potentially further tightening the milk supply. Strategic planning and adaptability will prove crucial for sustaining profitability and navigating the nuanced market landscape amid these challenges and opportunities.
Global milk production is recovering amid shifting dynamics, with the top 5 dairy exporters showcasing mixed performances. This resurgence is primarily anchored in regions like Australia, New Zealand, and the United States, which posted year-over-year gains compensating for downturns in Argentina and Europe. Notably, August ended a 12-month streak of declining outputs, slightly outpacing August 2023 by 0.2%. However, this figure remains below the production levels of 2021 and 2022, underscoring a deep downturn experienced in late 2023. Regional challenges remain prominent, with European and U.S. producers facing constraints due to disease pressures and a shortage of breeding heifers. In contrast, despite battling avian influenza concerns in California, the U.S. contributed positively compared to year-earlier figures. This backdrop sets a cautious tone as producers in both regions navigate these hurdles, potentially capping the pace of production increase. These trends expose vulnerabilities in sustaining continued price hikes for dairy products globally. While current pricing levels encourage more production, these persistent barriers likely tempered the extent of expansion. As China's import activity remains tepid, competition stakes for exports are heightened, signaling a potential standoff in increasing prices. The interplay between production recovery and regional constraints paints a nuanced picture. Stakeholders must monitor these developments closely, as they will play a pivotal role in shaping the trajectory of global dairy prices. Market participants should brace for a landscape where growth spurts could be short-lived, especially if supply surges fail to align with global demand, leading to price adjustments that reflect these underlying regional disparities and challenges.
As we unravel this week's Global Dairy Market Report, a nuanced picture emerges of a sector both adapting and challenged by an intricate weave of factors. Rising futures, particularly in butter, contrast with the mixed signals from S&P and whey, suggesting a potential realignment in demand and pricing dynamics. The European market hints at shifting consumer preferences and regional economic factors with its price adjustments. Fonterra's strong milk collection figures portray a robust sentiment in the Oceania region, which may influence global supply chains. Meanwhile, Italy's focus on quality and China's competitive pricing strategies underscore the diversity in global dairy strategies and market responses. In the U.S., despite challenges like bird flu impacting certain regions, the market for cheese and butter shows resilience, suggesting a possible pivot towards innovative solutions and product diversification. The overall production recovery in major dairy exporting nations hints at a stabilization. Still, it leaves us pondering, how will these dynamics evolve amidst environmental pressures and global economic shifts? Will producers pivot to sustainability and technology-driven solutions to gain a competitive edge? And crucially, what strategic shifts should industry leaders embrace to harness growth opportunities while navigating the turbulent tides of global market demands? These questions will undoubtedly shape the future landscape of the dairy market, encouraging stakeholders to remain vigilant and strategically agile.
Thank you for tuning in to the Bullvine Podcast. We hope you enjoyed today's insightful discussion. Don't forget to subscribe, share, and leave a review. Catch you next time on the Bullvine Podcast, where bovine expertise and community come together.